Welcome everyone to After Hours for TradersPost on this Friday, November 15th, 2024. What a week it has been. What has remained true is that I'm Tom Hartman, one of your co-hosts, here as ever with Mike Christensen, CSO of TradersPost. How's it going, Mike?
Doing well, Tom. Did you see that pullback today?
Yeah, it's been a pretty interesting pullback. We'll touch on that a little bit when we talk about what is it, the Kim Carson was right corner. Maybe I'll just do Carson's corner. Too many K's in there might be a little bit of a problem.
Right.
But it was pretty pretty significant this pullback, but not to be not unexpected. Look, I thought the election was like the high point, the high max volatility, and we wouldn't see anything else after that. No, turns out Bitcoin wants to make new all-time highs. SMCI wants to crash and all kinds of different things. So let's just touch on the headlines for this week before
Let's
we
do
get
it.
started. So the first thing we can talk about today is the SMCI stock that is just crashing, plummeting.
Mhm.
And what I really want to talk about there is not like the causes for it. There's plenty of people talking about that, but how can you actually profit from that? Next up, Bitcoin. Bitcoin is surging all over the place, and not just the stock price, but the news. It's showing up with Michael Saylor is talking about all the news sites are talking about it. It's one of the best performing assets. But what's more interesting to me is to talk about the theories that were floating around as to what price Bitcoin could get to, specifically the banana zone from Raoul Pal and the 5.3 theory for the top on Bitcoin from Steve from Crypto News. We'll take a look at that. And then finally, we'll hit on the Trump tariffs and what that can mean for the American economy, the global economy, and what kind of trade we could put on there. So I know it's pretty hefty, but that's the way I like it. I like when it's a heavy week. Before we jump onto these stories, were there anything that particularly struck your eye this week, other than the three stories we're going to go on? Is there anything you've been paying attention to?
Largely crypto at this point. Interestingly, even with today's pullback in the stock market, crypto is still looking pretty bullish, and that's the type of divergence I'm always excited to see. That's the type of momentum I like to see in crypto. Obviously, we broke into all-time new high territory, and it's a really nice technical setup that I've been anticipating for weeks now. Just as long as we had broken past that 69,000 point, which we did. This is a nice high volume momentous breakout, which is what I've been looking for some time now. I'm expecting one bit of a pullback to sort of test support, and then we'll go on from there. But yeah, Bitcoin and crypto in general has been of huge interest to me, particularly since we have such a pro crypto administration now.
Yeah, I'm calling it the Trump trade. And there's all kinds of different components to it, which I guess I should have really prepared for it before. But frankly, I didn't expect him really to be president. So I wasn't really prepared for this sort of thing happening. It feels like 2016 all over again. But here we go.
Yeah, this
So
is
look,
that
let's
your
go ahead.
point there is exactly why I'm a big believer in if then trading or if then investing. If this happens, then here's my plan. If this happens, then here's my plan. Right. So as long as you all had a plan prepared for either outcome, then you were good to go. So anticipating a Trump win is what was a big one for all kinds of different sectors and industries, but crypto is one of the ones that I was most interested in.
But to me, it's sort of like if aliens landed on the House lawn, I would have been as surprised as Donald Trump winning the election. And but with a landslide, to me, it was like, with the whole UAP stuff floating around, it's not out of the realm of possibility that maybe aliens might come. And I felt just as so I was like, I'm not planning for the alien trade, so I'm not planning for the, the Trump trade either.
Fair enough.
Before I can I am I blurry to you right now?
Yeah, you're looking pretty blurry on both our stream internally as well as the live stream on other mobile devices.
Darn, let's see what I can do there. Might be a restream thing here. Okay, well, you know what? I'll
But
stop talking.
I'm sure I and or at least myself and everyone following along here enjoys your soothing voice enough that just being able to hear you well is good enough.
All right, so I wanted to hit on the SCMI trade because the question that everyone has is, will it get delisted or not? Right. This is was a darling stock that was returning gangbusters returns. What was it, like 87% returns last year, or 2022, 243% returns 2023, and it was basically a proxy for the AI trade in the same way that Nvidia and Microsoft were proxies for this as well. Well, it turns out their accounting issues were a little bit fakakta, and they might fall. They might get delisted from the New York Stock Exchange, which is one interesting because they were delisted before and they came back onto the stock market. But I'm sure that doesn't make current holders feel any better. So the question I always have is, if the sky is falling, what's the trade? How can I actually profit from this? And I just wanted to point this out in case people aren't particularly familiar with options here. I'm gonna give a nice little Pollyanna view for this. So if we're in the SCMI, you'll tell me, Mike, if you think this is ridiculous, but I like these sorts of trades. And since I don't know if the stock right now is trading, what is it, at $17 or something like that, and it can fall to zero, or it can go back up to before this news came out where it was like at $48. So imagine you buy a Strangle where you buy the calls at let me just refresh this page. You buy the December 6th calls at, let's say you think it might go back to 48. Let's get them at 38. And you buy the puts, the opposite puts. So it'll be around $10. This will cost you $170 per contract. And let's say it did fall to zero or went back up to like near 50, what you can get. And this is the sort of chart I like, where the idea is that it's not likely that the stock is going to stay sideways. It's likely this is you can make 3 to 5. If it goes up to whereas before you can make 3 to 5x your money. Do these types of trades tickle your fancy at all?
100%. Yeah, I think the question I would have around this is the risk reward. Obviously, the risk that you've put up here is that fixed premium for your original options contract, and you've calculated the upside on either side. And this type of spread bet makes a ton of sense to me. It's really that you have the other side of it really prepared as a hedge to just a directional options trade that's most interesting.
Right. Taking trades like in the past and infuriating. Obviously, the biggest market pain is that they're given some sort of extension, and they said, okay, next quarter or whatever, some period of time, you don't have to file the information that we need you to file, but it's not guaranteed. We don't know what's actually going on. So SMCI doesn't have they don't have the accounting firm that can basically set up their accounting in such a way that everything's cleared. But they might not get delisted, so it might not fall to zero. And so when you're in a situation like that, what you don't want in a Strangle or a straddle is for the price to stay flat. And I almost feel like if I put on this trade, that's exactly what will happen. So for the sake of everybody who wants to put on this trade, I'm not going to do that to you. I'm just pointing it out. And by me not being inside of the trade, you can feel pretty certain that it's going to go one way or the other. That's me being a victim of the market, Mike.
Fair enough. I like the setup. I definitely like your thinking. What is unclear to me is how long the options market remains stable and liquid in the event of a delisting. Are you planning on holding these contracts to expiration, or do you plan on exiting prior to that?
Oh, I would exit. I don't like the risk of what happens when I get to zero. I'm fine with near zero. That's okay with me.
Got it.
Let me just to throw on something cute at the end over here as to why you might why someone might decide to take this trade. Let's see here. Jim Cramer says it's a sell.
It is time. It's time for the light round. still the case now that it's
Absolutely.
down around 8?
Absolutely, sir. It is still the case. I don't know how they can find an order. I don't know how they're going to be able to fight the delisting. Accounting irregularities equal sell, sell, sell the whole way until it's cleared up. And these guys have not cleared up anything.
So when I see that from Jim Cramer, I think to myself, hey, maybe long call options on an SMCI is not a bad idea, because wow, trading the opposite of Jim Cramer turns out to be pretty juicy sometimes.
It certainly does, yeah. And if he's taken that side of it, maybe there's a chance that SMCI manages to make it out of this after all.
That's right, exactly. And what a story would that, and that would be like on brand with everything that's happening right now. Okay.
Now, when SMCI got delisted back in 2018, they were delisted for what? How long were they off market for?
I think they were off for 2 years.
2 years?
Oh, it wasn't 2 years long? Yeah, I think it was 2 years.
Yeah, I don't have enough context for that background, but it would be interesting to know exactly what happens after the fact. If they are delisted, what happens to your options holding, and what impact would the options clearing corporation have on your existing contracts? Because they can effectively adjust the terms of those contracts after the fact, and they might also require early settlement prior to your expiration.
Oh, really? Oh, that's not good.
So if you're looking to take it to expiration, there's some volatility there. There's some uncertainty, in other words. I don't have a ton of experience on delisted options contracts. If anybody out there has some ideas, we'd love to hear your comments.
Excellent. All right. So next up is the Bitcoin trade. All right. We talked about Bitcoin every show. We're always asset. It's high performing, very liquid, very fascinating. Now there's probably like you, I have a bunch of friends who contact me all the time, always asking me, is this a good time to buy? Is this a good time to sell? They'll send me tickets and what do I think about this? What do I think about that? And always, it's never like some professional money manager with some very reasoned thoughts thinking behind the asset. It's usually these crazy things that very colorful, very green, very blinking lights try to attract attention. Now I try to be a little bit fair. Like, I don't know if they're doing those thumbnails and doing that sort of flamboyancy in order to get traffic, and so I always watch these videos and I see what they have to say. And there's one of these there's these two competing ideas over the last year for Bitcoin. One, there was this big expectation that even I had as well, that that Bitcoin would be making new all-time highs this spring, like last spring and last summer. But that didn't happen. And so this theory that was posited by Steve from Crypto Crew University started making the rounds, called the 5.3 theory. I'm not going to play his whole video thing because it's a little bit, I find it a little bit cringe. 1 second.
Maybe just the good part.
Well, I'll just talk over it.
Sure.
The idea here is that he was measuring the lows and the highs of Bitcoin and the relationship between them for each bull market, and he saw that there was this diminishing return that was happening at an interval of 5.3. So the next high was always in some relationship 5.3. 5.3 the distance from the previous low, giving. Yeah. So the idea here was that there was panic amongst I have some millionaire friends with tons of Bitcoin, and they want to make sure that, hey, should I be holding on to this? Should I be selling now? Because I don't know what's going to go on with the price. And the idea here is that there would be a cap on Bitcoin at, like, let's say around 80,000. That 80,000 would be essentially the high, and that we should have a pullback from there. Now, it looks to be like that's invalidated. We're not on it's been invalidated, and so the idea here is that, hey, maybe we do have a lot more upside to go, and if we do have a lot of upside to go, what do we want to go on? Now, this is other theory. Have you heard of the banana zone theory from
No, but I'm
Raoul
already
Pal
a fan
from
of the name. The banana. Say it again.
the
Banana
banana
zone.
zone?
Okay.
Yeah.
I know like one thing that tends to be true is anytime there's a new naming convention for old ideas, I'm always fascinated with how creative people get with the names. So I think we can we could probably take the name, set it aside, and go, oh, do you mean this? So what is the banana zone? Is this another? Is there a well-known concept underneath that?
Well, so the it's a fun name that Raoul Pal, who's the CEO of Real Vision, a sort of a financial education platform, coined, which is the period of time where essentially Bitcoin rips to the upside. That like if there are periods of time that you want to be holding these crypto assets, it's before this banana zone or at the beginning of this banana zone, and
Okay.
that's where Bitcoin makes its run. Makes total sense. We have that. These sorts of zones exist not just for crypto. We have that for equities too. These are usually a function of growth and inflation expectations. But I thought it might be fun just to just as a quick introduction to what Raoul Pal says about the banana zone, and then we'll come back to it on the other side. 1 second.
Let's hear it.
This, my friends, is the banana zone. This is when we've had 8 months of consolidation.
That's
You've
what
all
I
lost
thought.
your fucking minds.
From
and then
March
the
of
simple
24.
God candle arrives, and
Right.
suddenly we feel good. Lord Vishnu blesses us with the God candle, and we can all go about our business thinking we're the smartest people in the world. But we're not really. It's actually driven by global liquidity. You've all seen this chart before. Every time global liquidity breaks out, it goes through this consolidation pattern. As liquidity tightens, it breaks out. Crypto breaks out with it. Now, global liquidity is contracting right now, but it did break out to a new high. It's expected to break out going forwards, and I'll show you that in a second. So we're at the point where crypto does really well, which is the banana zone. Crypto follows global liquidity. Does it really well? It's got an 87.5% correlation. Global liquidity is forecast by our models at Global Macro Investor. Global liquidity comes in these seasons: spring, summer, fall, winter. Again, I've covered these a lot. We are in summer. If you look at the summer periods of that weird mustard orange, we always have a strong market in liquidity. So that's debasement of currency that makes our number go up. Our number go up is Bitcoin. Bitcoin is the benchmark asset. And again, we go further out the risk curve. Late summer and fall is all about the risk curve. We'll come on to that. But if you look at the mustard periods, it's always gone up in summer. In fact, so is the NASDAQ. All risk assets always go up. Election years, same thing. Presidential election cycle, all the same thing. And then in fall, we tend to have a good rally, and then we top out eventually twice. Global M2, another indicator of private sector liquidity. Bitcoin and that, very good. We're having a little correction now. I don't think it comes back to 80,000, but who knows? But either way, it's doing exactly what it's supposed to be doing. Even better, the GMI total global liquidity, 10-week lead. It's been spot on, kids.
So that's the idea of global liquidity, like we've been talking about for weeks now, and the idea that these high beta assets to liquidity, such as tech stocks, crypto, and some of the indexes, they're going to follow this sort of thing. Mm-hmm. And so the Fed cutting interest rates and the central banks all around the world actually cutting interest rates and easing up on quantitative tightening. This is adding liquidities to the markets, and we're going to get a rise in these assets. Not to mention China just put in, $1.2 trillion of liquidity within their system in order to try to save their real estate market. And countries all around the world are doing variations of the sorts of thing. And so until this liquidity gets pulled back out, there's no real reason not to think that these risk assets are just going to continue to rip to the upside. And if that's the case, well, it's very hard to peg a top on assets that are moving both on narrative and on liquidity, right? As long as the liquidity is there, the price that you're going to be getting for the asset is just a marginal price, right? It doesn't say that there's enough volume to absorb everybody who wants to sell at that price, but it means that the price will go up higher and higher and higher and higher and higher. So do you see anything that you were saying at the beginning that you're actually pretty bullish right now. Are you seeing anything that's giving you pause as to how high Bitcoin could go over the next 6 months?
I'm long-term bullish, but short-term bearish. I actually think we still have some work to do to retest some of these lows or some of these new support levels that have been created. So the $74,000 mark would be an interesting area to keep an eye on. I think that there's a lot of potential that we're now going to test this new range of prices between 74,000 and the peak of 93,000. So I don't expect that we just keep going up and up and up forever. Obviously, most markets tend to breathe in between these ranges of price. That zone that Raoul Pal was talking about there, the banana zone in particular, was a fairly long consolidation period that went on for 239 days, most of the year. And now we've broken out, and it's a very strong breakout. It's coupled with volume. It's also coupled with a pullback in global liquidity. I think that now we have to retest this zone, retest the market's strength into the asset, and see where we go from here. But I do expect a short-term pullback before I'm ready to add to positions. That said, it definitely looks very promising. I think the long-term question is where do we stop from here? I've done a few measurements from a few different perspectives, looking at like a really kind of a Fibonacci extension. I think that there's some potential that maybe we get into the 130, 140 zone. From there, it's a kind of a question of how much strength is left from the market. But it's tough to say where the top is for sure.
So the question I have here is because when I see altcoins starting to rip as well, so not just the meme coins, but Cardano, I think just went up, what was that, 100% in like a week.
Mm-hmm.
Solana is up pretty significantly off the lows. You have Algo ripping, you have XRP ripping. Now these things are moving, and they seem to, like, I'm not seeing the move across all assets, like all crypto assets. I'm seeing it in very specific ones, and the ones that I'm seeing are the ones that have some sort of relationship to the new presidential administration, to the Trump administration. I don't know if you've noticed this, but like
what is that connection?
Like the Gary Gensler looks like he's stepping down as SEC chairman, and so to be replaced
everything
with someone
previously identified as a security is no longer.
Well, yes, but it was the assets that were affected by that, the crypto assets that were affected by that, were the ones that seemed to be particularly targeted by the SEC, as used as examples. So XRP, Cardano, and then some of the coins who are connected to the network. And then there's been, I'm a big Cardano fan, and there's been this series of tweets from Charles Hoskinson, who's the creator of the Cardano network, and he's talking to Elon Musk. He's talking to RFK. He's sort of like, he's under NDA. He can't say anything. So it's like, okay, what's going on? Is the Trump administration not only going to be friendly to crypto, but also use the blockchain as a way of having identification for voting or transparency for government spending? Like, did that actually happen, where the Doge Department of Government Efficiency uses crypto in order to and merge that within the government? I mean, that would be unbelievable.
Mind-blowing.
What would happen to the crypto coins?
I think it would be impressive from the perspective that it would be fairly sophisticated of the government to actually implement such a technology. It's kind of unusual. Our governmental systems tend to be pretty far behind the times. Rarely use modern technologies, so that would be pretty interesting.
What's cool about Cardano and why I like it so much is it's considered a nerd coin. They've been actually developing these types of technologies for years now. So there are other countries that are using it for identification systems, for tracking of items, wholesale items that are being distributed, for logs, for education systems. Like, they are actually built to do that. And the idea that so I'm long Doge because it has some sort of connection to Elon Musk. and then that coin went up 300%. And then I'm also connected to ADA because I think that could have a connection to Elon Musk, and then that went up 100%, and then Tesla skyrocketed off the lows. I'm just like, okay, whatever's tied to Elon, first of all, never short Elon, always long Elon, and then now he could be tied to the U.S. government. I'm just like, this is crazy. Like, to me, the upside that then can happen just based on hype and narrative alone could be incredible. Like, the upside potential for crypto could be insane. RFK, during his run before he endorsed Trump, wasn't he saying something like he wants the U.S. Treasury to start buying a certain amount of Bitcoin as a reserve asset?
So that is in line with where I've been most interested in government activity around cryptocurrencies, is basically holding as a reserve currency. That subject is really interesting to me because at the moment, world governments around the world hold about 2.2% of Bitcoin. It's a fairly large amount. I know in the United States, we hold about 213,000 Bitcoin that all came from seizures. And interestingly, like most of the acquisition of Bitcoin around the world came from seizures of Bitcoin from fraudulent activity, right? Like China owns 190,000 crypto that was taken from the Plus Token Ponzi scheme. The UK owns about 61,000 Bitcoin that was seized from a money laundering crackdown, and so on and so forth. What they're not doing, though, is engaging in the procurement of Bitcoin as an asset that can be used as a reserve currency on some regular basis. What would be interesting to me is to see the government change its posture to use Bitcoin as a reserve currency or a reserve asset of some kind, but they were buying it on some regular basis. And that seems possible if the administration starts looking at crypto in that way.
So if that happens, then I think the theory I've had is that the reason we've had diminished returns for Bitcoin in that 5.3 theory is that Bitcoin has been in a giant bull flag since its inception. And so what that would mean is that could then have an explosion upward where the entire history, or nearly the entire history of Bitcoin, actually has been in a consolidation zone. And if that happens, well, then Michael Saylor's $13 million per Bitcoin, or Cathie Wood's crazy numbers, well, it becomes possible. And if indeed it almost allows cryptocurrency, or Bitcoin specifically, to be an off-ramp for the debt issue. It's like a type of weird debt jubilee that can happen for governments if you had this offloading of debt and converting it into an asset where that collateral ends up being worth like unbelievable amounts. Sure, you're not selling all the assets in order to cover the debt, but it becomes a new base to the house of cards of the debt structure that we have for our economy. Does that make sense? Like, it becomes a new asset that's now valued at some insane amount that can now reset our financial system accordingly and make the debts that we've had so far, you can just wipe them out. The whole thing to me is like reeks of a sort of like too good to be true, but you can almost see that actually happen, where the governments are like, okay, well, this could be our exit from this debt spiral that we've been in, and then now let's reset the system for the next 100 years. I could totally see that happening.
Well, it definitely gets me trying to think more about my long-term position on Bitcoin. I have never really been a long-term Bitcoin holder. The more we talk about the idea of Bitcoin being a reserve currency, though, it makes me wonder, why the heck am I trading Bitcoin back into US dollars then? I should be holding as much. I should go the Saylor route here, right? Maybe Saylor's got it right.
Exactly. Well, that's why I find it so interesting when my friends ask me, why are you holding Cardano versus even Bitcoin and these other assets? It's because I think, let's say Bitcoin does become the reserve asset. To me, what's exciting is not holding this new asset any more than I'm excited by holding US treasuries. What makes me excited is the adoption of this technology and the use of it now, and the way that that we've all been promised that it could be used.
Sure.
What's the Amazon.com version of crypto? What are the new applications? Then it makes looking at what's going on within the crypto space really interesting. I think we were talking about on one of our meetings recently. What was the Wi-Fi network that John was talking? I know there's
API
one
3.
called API 3. There you go. Or Helium, which is another one that's like that, or the ASI tokens that are being used right now to power AI development within the space. There's all kinds of interesting things that are happening that, because there's not the financial rails, there's no it's not being sanctioned by the governments around the world, or the biggest, most influential government, the United States, sort of been on the sidelines. If crypto ends up being integrated into the U.S. government, oh my God, talk about an explosion of possibilities and funding that's going to be happening with the crypto space. It's just so exciting. And who knows the multiples you can get on those coins. It'd be crazy.
I'm still of the opinion, though, that if I have to hold anything, I would feel more confident holding Bitcoin than any other cryptocurrency. And I think my thought process behind that is it is the one that is truly peer-to-peer. There's no central. I mean, there's of course the Bitcoin Association and responsible for maintaining it, but there's no Amazon servers behind this, right? Like it's truly peer-to-peer, and I think it has the longest lasting brand impact as well from the world's perspective. As long as there's no change made to its scarcity and being pegged at 21 million, there will always there will never be more than 21 million. I think it stands a much bigger chance of being the most used current cryptocurrency in the very long run, right? If we're talking 50 years from now, which one really survives would be my question. As I've been around crypto long enough, I can tell you I've been watching this industry since 2012 when I first read about Bitcoin. The industry has been filled with all kinds of winners and losers. I could show you the 2014 coin market cap list of the top market cap coins at that time, and about 80% of them aren't even around anymore. But the one that has survived is Bitcoin. So my question always remains, like, which one would you hold for the very, very long run? Do you think Cardano's around in 25 years from now?
I do think it is, but to your point, it's already a volatile asset. There's no real benefit to being, overly sized on the Cardano. It makes more sense to have heavily weighted on Bitcoin if you could go that route and have these things as a 10%, 20% on the side. But given the fact that I'm crazy risky, I'm going to go 80% Cardano, 20% Bitcoin.
But I still think you're thinking in U.S. denominated terms, though. You're getting back into U.S. dollars in this trade, right? You're not holding Cardano forever.
Well, no, it depends. I don't think you can really separate the two. The crypto system is not trying to. I know that's the promise of it, but it's not really trying to replace the existing financial system, right? We just need a way of being able to tie productive activity to a coin. Like, that's what I think the coin is for. You tie productive activity that the regular US dollar can't tie to, but then you want to convert into that to the US dollar. The reason why I want to keep the financial system that we have throughout the world, the Eurodollar system, it's not something that was like fly by the seat of the pants. They just decided one day and they snapped their fingers and it's there. It's a very complicated web of technology that's set up all around the world that allows me to deposit money in my account here and then go to Japan and withdraw money from an ATM over there. Mm-hmm. It's not some straight pipeline. There's all kinds of things that's happening, and the idea that will get dismantled in any in any significant amount of time, I don't think it's feasible. And so I think we still need the US dollar as that measuring stick to how we can actually compare the crypto tokens. Because if I were to think of Cardano in and of itself, it's hard for me to generate any value for it because I'm not specifically engaged in any productive act that I can tie a certain number of ADA to, or even Bitcoin to. Mm-hmm. But I can go, okay, Bitcoin is at 91,000. I have an idea of what that means.
Sure. Yeah, I think early on when I was considering the altcoins versus Bitcoin, I was actually, this is actually a function of just the exchanges themselves. In the early days, there was no Tether, there was no USDC, there was no USD denominated pairs. You were actually trading everything against BTC. So you were comparing the relative performance of the altcoins to Bitcoin and ultimately deciding, when do I want to trade this altcoin to sell back into Bitcoin or so that I could actually increase my Bitcoin holding. Those days are long gone. Like I know the market still exists, the BTC market still exists, but they're thinly traded relative to the USDT and USD markets, right? Or even other foreign currencies. I guess my question has sort of come full circle to this idea of, if governments start looking at crypto, or excuse me, specifically Bitcoin as a reserve currency, is it appropriate for we as retail investors to start thinking of Bitcoin as a reserve asset ourselves in the same way that we do gold? Should we start denominating our trades against Bitcoin rather than against the US dollar? Does that change your thinking at all?
Well, it's just like how the central banks, their gold is still the reserve asset for the central banks, and
kind of.
But yeah, well, they accumulated in times of financial stress, and I could totally understand why. But they still measure it in terms of what's the value of ounces of gold in at least their own currency, if not the US dollar. So
that's true.
I like that as a way of diving into crypto, because it's sort of like how with the rise of social media, views, likes, any type of engagement online, we know there's some sort of value to it. Like, we all intuitively understand that somehow the number of views or watchers or something, this metric, somehow is convertible into something that's valuable to me, where I can actually spend it. But we don't know how. If you were to ask me, what does one view on Facebook worth versus one view on YouTube, I can't really tell you, but I know they're worth something. And to be able to convert that into an actual dollar amount, like, this is the number of subscribers for my Patreon, this is the amount I'm receiving per month from ad revenue on. Okay, now I have a number that I can convert every unit of visibility, every unit of attention into something that's actually useful.
Right.
And so the US dollar is so useful as that. I don't really see any crypto superseding that in the next 50 years.
Okay.
Yeah. I do want to actually, let's jump to the last topic over here, because I'm very interested in your point of view on it. And that is the Trump tariffs.
Okay.
Now, there's all kinds of different policy measures that the new Trump administration is looking to implement, and I'm sure we'll talk about it in later shows. There's the tax cuts, there's the deportations we're talking about, there's the abolishment of certain agencies, there's all kinds of different things that are going on. But I just want to touch on the tariffs idea here, because I started off with, before I started researching this, and by the way, Mike, since I've researched it for several hours, I'm now an expert inside of it. So everything I say, you can throw away your grain of salt. But I've been of this opinion that we're going to get, 9, 10, 11, 12% inflation coming back.
Right.
And to me, it just seemed like the Trump tariffs are right on cue with that. And, right in the same vein of it. And I'm now not so sure that I'm against the tariffs. Like, I was actually pretty much against the tariffs because I thought it was a good idea, poorly executed. Okay, we're gonna have other people pay for it, but we all know that it's the citizens who pay for it. But then, as I thought more about it, I was like, okay, it could actually be good. But before I throw to you on that, I'd just like to play you a video from Mike Green, who is a financial analyst, very respected within his field, who talks about what could be the effects of the tariffs, either good or bad.
Let
me just play that real quick.
Economy is Trump inheriting here?
Well, again, I think he's inheriting a bifurcated economy that can effectively be split between those who are rich in financial assets and therefore don't need to borrow and instead benefit from higher interest rates through increased income, and those that are trying to get their start in life who need to borrow to effectively obtain capital to use in their productive career, right? You graduate from college, you need a suit, you need a car, you need an apartment, you need, right? And all of those things, renting an apartment is just a form of taking out debt, right? And saying, I will offer you payment to allow you to service the costs that you incurred in terms of building this house for me, right? All of that has to be put in place for those individuals beforehand. And by hiking interest rates, we've actually disadvantaged that segment of the economy. We see this particularly in the unemployment area, where many of the tools that have allowed other Americans to avoid filing for unemployment when they lost their job, things like Uber, et cetera, are less available to the younger generation. Many states actually ban those under the age of 25 for driving for Uber because of insurance purposes. Same reason they can't rent a car at the airport, for example.
Right.
And we actually see this in the data. So there is a very marked deterioration in the unemployment rate for those under the age of 25 relative to all other age groups. When I talk to my daughter, who is in the process of graduating college from a fantastic school and has done very well herself, many of her friends are now really struggling to find employment or internships or the opportunities to get on that ladder. And that's happening at the top end. Everything I'm hearing suggests that in less prestigious institutions, it's even worse.
It's been worse.
Imports and 60% tariffs on all imports associated with China, and we were to receive no net benefit in terms of increased exports to those countries in exchange for it, then you have a very bad outcome, right? I mean, the simple math is prices go up in the United States. That means that on things that people need, they would have to spend more money on those. That leaves less money available for discretionary purchases and savings. That in turn trickles through the economy with a dramatic slowdown. There's a second policy that Trump has announced that, again, I think is a literally versus seriously component, which is the deportation of illegal immigrants. That can be conducted in a manner that's actually fantastically valuable, right? Trump could make an announcement. You're an illegal immigrant in the United States. You have 30 days to register with the INS. If you have not committed any crimes, if you have not done XYZ, and you have a job, we're going to expedite you through the process of getting a green card so that at minimum, we know you're actually participating in the system on a legal framework. You go 30 days past that, then there's going to be penalties associated with that. And if you go 30 days past that, let's call it a credit card delinquency of 90 days, right? There's going to be incentives to deport you and you're not coming back, right? Again, could we have a scenario in which everybody declares we suddenly discover a whole bunch more tax revenue associated with illegal immigrants that are currently being paid under the table? The system becomes more fair and everybody is able to pursue it in a profitable and legal economic framework going forward. It's a possibility. Is it hard? Yes. There's no question about it, right? And
all right, so I'll stop it there. The video is actually fantastically interesting. I'll actually just share the link instead of the chat because I just thought it was just so wonderful.
Sure.
And he goes on to talk about this idea that there are ways of implementing these ideas of the tariffs and of or all the ideas from the Trump administration that could actually be beneficial both in the short term and the long term because of the bifurcation of the economy, right? We've had this issue within the globally, but especially the United States, where those who have more and those who don't have less. And it's to the point where people thought that the higher interest rates that would be charged would cause the higher interest rates because of inflation would be hugely problematic for everyone. Well, no, it was actually only really problematic for people at the low end of the economic scale, because those who had money, who were, let's say, selling. You're retired, you're a baby boomer, you have a bunch of assets, and you're selling 4 to 5% of your assets every year in order to generate the income that you need in your retirement. Well, now you don't need to do that. Just by holding the bonds, you're able to generate the 5% that you need in order to survive. People who had money didn't need to go into riskier assets in order to generate yield. They could put the money into the bond market and generate a safer yield without having to think about it. There was more opportunity to make money for those who had money, and those who don't have money, obviously, their prices went up. Groceries cost 4 times more. They can't offset that cost and all the problems that happened there. So the tariffs, what happens is that the those whose money has been the disposable income, they're going to have higher things to pay, and that tariff money is actually going to the government. And the plan is for the government to use that money to reduce the size of government and reinvest that money inside of in a redistributive fashion within the United States. So, which will go to the lower end of the economic scale, right? Because how are they going to get out of this hole unless there's some sort of helping hand from above? So there's good things and bad things about it, but the idea here is that the tariffs could actually be very stimulative for the economy. And even though you have higher prices for goods, those goods and services can be avoided, as they are avoided anyway by people on the lower end of the scale who can't afford it as it is now. They can be avoided while new opportunities for jobs locally become more available. What do you think?
So I remember in 2005, 2006, somewhere around there was an act that came up for proposal called the Fair Tax Act. And effectively what it intended to do was to increase the national sales tax on all goods and services and decrease our income tax entirely to a point where effectively we could get rid of income tax altogether and then start taking advantage of the fact that more citizens would be paying their fair share of taxes based on their consumption. And I think at face value, I was really quite interested in this because this also captured, people who are tax evaders, criminals, illegal immigrants, everybody. Now everybody's paying their fair share in taxes, right? Because if you're going to buy something in America, that's going to go directly towards our taxation system, right? I think what I'm seeing here is something similar, where an increase in tariffs will obviously naturally lead to a rise in the cost of goods and services in America. Each time you consume, each time you buy something, it's slightly more expensive than it was before. And that tax revenue is being passed on to the end consumer. In the meantime, tax revenues have already been collected by the government in the form of tariff taxes in order to fund some of these programs. However, I feel like there's a little bit of a trade-off here because I think Trump intends to reduce income tax at the same time that he's increasing the tariff tax. So I don't know that we end up with any kind of necessarily budget surplus. And at the end of it, all we've done is just traded income tax for sales tax. What I like about that is that you have a choice. You have a choice not to spend. You can decide that I'm going to take advantage of the lower income tax and save some of the money that I'm keeping from that. But in this world, in today's day and age, saving is less possible for the average American than it used to be. We're still going to have to spend. And I think that ultimately the impact these tariffs potentially have on the average consumer is enough to where we're not really talking about average daily choices here. We're talking about the cost of goods affecting the necessary spending of the average person, not just the discretionary spending, right? Where I have the choice of I don't have the choice of not feeding my family every day. And if the cost of feeding my family has significantly risen, that's going to affect everybody in the United States. That's the part I think I'm mostly concerned about is that this isn't a one-to-one trade. I think this actually ends up hurting us more than it helps us.
All right, so let me show you these two articles. I thought actually I can show you that other one. I'll describe one and I'll show the other, because this was also my concern. Right, on paper it all seems like it could work out. It could be pretty interesting, but then you go, well, there are other actors, there are other players within the other countries that you're charging these tariffs to, the different participants within the United States. What are they going to do? So I thought that the tariffs automatically meant a higher price for the goods, but no, the tariffs can actually be absorbed by the foreign country,
the importer.
Right? Well, first the foreign country what they can do is debase their own currency in order to offer the goods at a lower price, and so that the tariffs aren't felt, that they're essentially absorbing the tariffs on their end, which the U.S. government, the idea here is that the Trump government wouldn't actually want that, because the whole point is that they don't want to have to compete abroad. They do want people to purchase locally, but whatever, leave that aside. That's still a possibility. You have the possibility that, like you just said, the importer can lower the prices, get a lower profit margin in order to keep the prices stable, and that would come automatically with a need to increase productivity. Right, you have to increase productivity in order to find ways of maintaining your profit in order to offer those goods locally at a lower price. What was fascinating, I was reading this Atlantic article talking about this idea where in other areas we're fine with this, right? The carbon tax credit. The carbon tax on gas on certain goods, in order you pay more in order to ostensibly help the environment or to mitigate pollution. We're fine with that. We go, no, we accept that higher cost with the idea that that is beneficial for the society. For going green, there's all kinds of different green technologies that are more expensive, especially in the short term, that we acknowledge could be useful. For buying local. How many times have you heard people go, well, you should support local businesses, even though they're more expensive for your coffee or shoes or whatever it is, as opposed to going to big box retailers? That pitch has been done in all kinds of different scenarios where we go, no, accept the higher prices and we'll benefit locally, the society as a whole.
Yeah,
That
but I think in those examples that you've provided there, those are marginal increases in cost, not significant increases in cost. Maybe if I could, one way to put this into context is to compare it to the typical average rate on all imports throughout the past. If I can share my screen, let me just give you this example here. So if we're looking at the history of our tariffs over time, you can see that rate has come down significantly over time. And even looking at 2018, when Trump had originally implemented the first spike of imports, we saw that average rate on imports go up from roughly 5% to 9%. What I find really interesting about this chart is that Trump is proposing almost an 18% average rate on all imports under his current proposals. Well, we haven't seen that average rate that high since 1933, which happens to coincide with the Great Depression. So I really question whether or not this is marginal increase in cost versus significant increase in cost. Does that make sense?
Absolutely. Well, there's two things there. One, we know that the way that the system is currently working is not working. It is causing a greater and greater divide between those who have and those who have not. And so something different must occur. And obviously, that's why a bunch of people voted for Donald Trump. They're like, well, let's try something. If it's going to be worse, fine. But we definitely know that the train we're on was bad. But I'd love to share this one article here that I found pretty interesting. This is from my own country. This is about the I don't know if you remember, there was this whole hubbub over NAFTA, that the North American Free Trade Agreement that was pushed through, I believe, under the Clinton era, and that some people praise and some people don't like. And what it net resulted in is a bunch of companies that went abroad, that there was this drain of manufacturing from the United States because of the whole Triffin's dilemma that we've talked about last Friday. So this is something that I thought was interesting. This is from after this new agreement, which is the Kuzma agreement, the Canada, United States, Mexico agreement. Trump spent years threatening to cancel NAFTA, but in the end, the rewritten deal, now called Canada, United States, Mexico agreement, has been heralded as an example of how deals can be made to benefit all parties. Since the new agreement came into effect, quote, trade between Canada, the U.S., and Mexico has flourished, wrote a TD economics team in a research paper after last week's election. TD says trade is up more than 30%, or more than $1.5 trillion since the deal was negotiated. Trump, from an American point of view, has been proven right, said trade lawyer Mark Warner, a principal at MAAW Law in Toronto. Warner says that most Americans never supported free trade, and that Trump was able to break a consensus among Republican politicians and drag the party closer to public opinion. When Trump came along as president, he said, nope, we're not going to be the old Republican Party. We're going to go after China on trade. We're going to go after all our trading partners. We're going to drive a higher bargain. We're going to look at all these deals and say, what the hell is that? Said Warner. So in classic Trumpian way,
Yeah,
exactly.
I like it.
Classic Trumpian way, sort of like, well, let's just reimagine this, and I don't like this trade deficit, so now we're going to do whatever we can in order to stop it.
Mhm.
Now, I know some people are saying, even Mike Green was saying, don't take Trump literally, right? But let's say he did actually get everything that he wanted, and tariffs were up at 18%, 20%, and 60% on China. What you'll find if you read other newspapers in other countries
Mhm.
is that they go, one, we don't want these tariffs, but we can't tell the United States, well, then we'll put tariffs on you. They'll say that. They'll be like, we're going to have to find some other way to compromise because we don't want these tariffs, or they're going to have some sort of impact, and so we're going to have to negotiate. And they're ready to negotiate. These are other countries are like, okay, we're going to have to figure out some way. And they describe it as America. If they do this, America's going to shoot themselves in the foot. But you know who definitely doesn't want America to shoot themselves in the foot? Every other country in the world. So they're like, okay, let's think about it. Okay, we've got to make the populist agenda of the United States, this mandate that basically Trump had from the United States. We've got to make them happy some way. We have to negotiate. Sure, we know we've been like screwing them in this way, so let's pull back on that. And there's going to be a rejiggering of the system, which makes me extremely excited. And after seeing this thing with the as a Canadian, I'm super excited about it because we basically don't do anything until we see the United States do it. And if you guys do that, then it opens up the opportunities for us to do similar things. And I do like this sort of like bring things local, make deals for abroad that help the populations from those countries, as opposed to just the upper 10%. Right.
So are you anticipating then that the entire narrative around increased cost of goods could be false because the threat of increased tariffs is enough to force other countries to renegotiate deals with America to the extent that consumer goods could actually be less expensive? Or
yes.
Okay.
And the tariffs go to your own government. Like, I like that. The tariffs go to my own government, and I have some say in that, as opposed to I get lower prices for goods, but the profits going somewhere, and I have no say on that. There's no benefit to me there. The idea that I can either pay the tariff by having the outside good and get that status that I had this higher cost outside good, blah blah blah, or I buy locally and I'm supporting locally and I don't have to pay the tariff. I like that sort of dynamic, and I wish there was more. I wish there was more politicians talking about, hey, how can we actually shrink government, actually potentially increase revenue to the government, but while shrinking government, giving more freedom and purchasing power back to the individual without printing more money, right? Because nothing that we've talked about so far with the tariffs are we saying that we need to actually print dollars. Whereas every other policy that I've ever heard any other politician talk about is how we're going to print money and give it to you.
Right. Okay, so now we've got another part of the equation to balance out, which is the effect that deportation will have on this as well. One of the insights that I picked up in really kind of researching this topic here was the idea that there's actually more tax revenue collected from illegal immigrants than people realize. It's almost $20 billion a year. And the reason why is that many illegal immigrants actually provide a false social security number, and their employers are still paying their share of employment taxes to the federal government with every paycheck that they're giving these individuals. It leads to a lot of headaches in the long run, obviously, because then they're still filing all this paperwork and they're not even valid citizens and so on and so forth. But we're still collecting that revenue. It still shows up at the door of the IRS. So it's worth pointing out that by deporting as many of these people as possible, however that process is going to unfold, and as however costly it's going to be, we're also potentially losing a lot of that tax revenue that we're already collecting. You have thoughts on that?
Yeah, so it's so fascinating. The idea here is that, because the linchpin, and I didn't really come to terms with this, I didn't really understand what the argument for open borders or undocumented workers were until I was listening to Pod Save America. I don't know if you listen to that podcast, but I'm going to be delicate here because I don't want to misquote them, but essentially they were saying that the United States caused the social and economic problems abroad. Those people then decide to come to the United States in order to seek a better life. And the agreement that we have with the undocumented worker is that we get to pay them less than minimum wage. We get access to services that we couldn't, and goods and services we couldn't have otherwise. So they're like almost like the second class citizen, but it's better than where you were. And we also made your country worse because of how, our American imperialism. And I was like, they're defending this? They're like, we want the undocumented class? I was like, this is, I had never heard anyone say that out loud. So strange. So the idea here is it always comes down to the idea of the profit motive, right? The Triffin's dilemma that we talked about last Friday, where there's an incentive for countries around the world to solicit manufacturing and production away from the United States abroad, has the effect of diminishing the causes the bifurcation, diminishes the quality of life for middle and lower income earners in the country that has a reserve currency, in this case, the United States. And so we have to stem that tide, and that tide has to end eventually with the United States no longer being the reserve currency. I mean, there's no real way out of that. Either be an empire, grow, have the reserve currency, debase your currency until boom, it collapses one day, and the barbarians are at the door, or that whole thing's got to change. Like, there's no real way around that. And so I see all these things, the tariffs, the deportations, and all that on the road to let's no longer be an empire, right? Let's no longer be an empire. Now, if you're on the side of let's no longer be an empire, then that for a period of time there'll be anarchy, there'll be chaos, there'll be a disruption. But the idea is that the rebalancing actually favors all foreign countries. Like, it's actually bad for, like, in order for foreign countries to solicit the manufacturing and production from the United States, we have to lower our regulations, lower our taxes, we have to solicit you in order to come here. So we actually worsen our own situation in order to get dollars to pay the debts that we incur because you're the reserve currency. It's not really good for the rest of the world. And then the United States gets to print all the dollars that they want, because there's no limit to how much they can print, because they can never print enough to satisfy the rest of the world. So those who can print are the elites who have all access to all this money, and then all the regular people, there's no incentive to help them at all. So you get more wars, you get more problems with the more social unrest and blah blah blah. So I think everyone is benefited if we switch that system. We go through this turmoil, except those at the top right now. Those at the top right now are the ones who go, hey, whoa, I'm happy with the way that the system works. And you're like, yeah, well, you just saw the election. Not just the United States, all around the world, this populist uprising, this fourth turning populist uprising, we're not happy with it. So let's flip the table. Let's get a period of anarchy. Let's rethink about how we want to do this. Let's make sure that the people who are in charge knows that no, we're not going to accept this anymore. And let's see how the pieces fall. So how deportation will work with there? I think it makes total sense that the American population go, hey, we can't have 10, 15, 20 million people that we don't know in our country. Like, we can't have that. I get that. And this used to be the Democrat position during the Clinton era, right? All the policies that Trump is talking about now were Clinton policies in the 90s. We all accept that. But I would be fine if they all became documented. Just document them. Have a class where you can apply, just like Mike Green was saying, let them become citizens. I think deporting them all makes no sense. I think that's absolutely ridiculous. I think it makes sense as a threat in order to stem the tide. But those who are still here, if you're born here, you've been here for 10 years, you haven't committed crimes, become a citizen. Americans actually don't have a problem with those people become citizens. They just don't want them to be undocumented. And at the same time, and this is what I think is going to happen, Mike, I think what they're going to do is massively increase legal immigration. Those who have been on the waiting list, just start approving so many of them real quick. You want to offset that, be like, no, we're not actually against immigration. We just don't want illegal immigration. And so you get a bunch of dreamers, you get a bunch of people who are already become citizens, and then they all get to be part of the American dream. You don't have the social conflict of you're not supposed to be here, you're not a citizen, you don't have any of that, while you stem the tide at the border and everyone benefits. I think it could be really good all around.
Now, I can get on board with that idealistic outcome. I'm not sure how realistic it is. That said, to shift gears, because I know we're a little over an hour now, what is the trade from this? And I'm going to start by leading with where I think I'm going to be paying attention. The futures markets that I think are most directly impacted by import tariffs. Those are going to be crude oil, copper, lumber, soybeans, nat gas, metals. steel, the main markets that I think are going to be impacted primarily by our imports. Now, if there's any kind of volatility in those markets, I'm going to be paying pretty close attention to that. On the subject of deportation, not much of a trade really on that one, but maybe you've got other ideas. Enlighten me.
To me, it's the father of all trades, and I think it almost rivals the crypto trade, and it's long dollar. Okay. I think the dollar
and you've been spot on with that one. We hit that base of $100, and now we're at almost 107 now. So I like your viewpoint on that one quite a bit. So you're still anticipating we see the dollar at 115?
Even worse, when you have I think on the path to the dollar no longer being the reserve currency, 5, 10, 15, 50 years, whatever it is, it's a crash up. And the long dollar trade, I think, will mint millionaires. Just call options or leverage long in forex until you get to until the conversation is that the dollar is no longer the reserve currency, and then boom, it crashes. And until then, you could make hundreds of thousands of millions on that now. So I think the idea is that and as a foreigner, it's so funny. As a foreigner, it's such a juicy trade. I don't want my currency.
It's always interesting to me to hear how bullish you are on the US dollar as a Canadian. I mean, where do you think the direct impact is on your taking the short side on the Canadian dollar effectively?
Well, foreign countries have to debase their own currency, and they have to print their own currency to buy dollars. They always have to do this. So we have this natural process where you look at any chart, and unless you're like the Swiss franc, where their sovereign wealth fund, they're in surplus, it's falling. Your currency is always falling, and we feel that. It feels so much so that, and this is when I say that foreign countries have to solicit dollars from the United States, I'm talking about even individuals. So when I have an American client, when they pay me, I go, not only do I get this currency, this US currency, if I just hold it, the longer I hold it, when I convert it to my currency later on, I'm going to get an extra 35%. Like, it's just unbelievable. And it's like, I don't want a Canadian customer, I want an American customer. And so it's really interesting to talk to people when I talk to people who are in America, I don't think they necessarily understand just how valuable the US dollar is everywhere and everything. And so long dollar for me it's long dollar, long crypto, and between those two, there's almost no other trade I want to take other than if you're doing leverage or options strategies, whatever. Long dollar and long crypto.
All right. Well, we had a few good trade ideas, Hal. Out of this one, I'm very curious to see how your SMCI trade plays out. Have you already put that on, by the way?
No, I just saw it today. I should have put it on today, but I only calculated it after market close.
It's going to be a big difference by Monday, then, I'm sure. They're up against the deadline, right? What's the deadline for SMCI?
Well, it's supposed to be tomorrow, the 16th, but there's no announcement. So I think they're going to give them another few days or whatever. And if it's still listed on Monday, I'm actually likely just to do calls.
Got it.
I love the idea
of a directional bet. Okay.
Exactly. Just right along. Just a call spread.
Right in line with the risky trades I know you to be very fond of.
Excellent. All right. Well, that's it for this week's After Hours. It was fun. Thank you, Mike. We never really touched on politics before, but when it comes to actually trade ideas and you can make money off of it, that'll be great. What is it? In a few days, you're gonna have the Mike Tyson Jake Paul fight. That's the only other trade I want to take on.
That's today.
Is it today? I thought it was on the 20th.
No, it's on Friday, right?
Okay, I'm gonna end this today, and then go on Polymarket and bet against Jake Paul in order to get money there.
All right, good luck.
Perfect. Have a great weekend, folks.
Cheers, everyone.